Hey, good afternoon. Welcome back to the Riggy Report. I'm Riggy, and today we have something a little less fun to talk about. One of the bigger crypto trading platforms, Voyager, just recently filed for bankruptcy, and a lot of people don't really know what's going on. The information, it's a little difficult to understand. So I'm here to just tell you guys what happened. I read the corporate bankruptcy filings, so you don't have to. And I'm just gonna give you a rundown of what happened because a lot of people lost money. If you have or had money in the Voyager app, you're probably not gonna get your money back. People I know lost money. Hell, I even lost money because I had money on the app. Let's get right into it. Voyager is a crypto trading platform. It's very popular and a lot of people use it to buy and trade crypto conveniently from their app on their mobile phones. And because so many people use them, they are one of the main providers of liquidity in the crypto space, right? Now, there are so many other crypto trading platforms out there and they have so many competitors. One of their main objectives was growth. So to do that, they decided to do the impossible. They were offering up to 12% interest at a time where interest rates were at historic lows. If you go to the bank right now, you're probably gonna get 0.01% on your money. And here was Voyager offering people 12%. So because that was so lucrative, that was so enticing, a lot of people just decided, hey, let me put my money in Voyager. Now, of course, to give that money to their customers, they first had to make the money, right? So to do that, they came up with this business model. Basically was to lend crypto deposited on their platforms to third parties. And when they lent the crypto out, the third parties would either repay in cash or in like-kind payments. If you were lent cash, you paid back cash. If you were lent in Bitcoin, you paid back in Bitcoin. If you were lent in Ethereum, you paid back in Ethereum. So whatever you get, you give back. So between March 2021 and March 2022, they facilitated 125 third-party loans to 9 entities with a market value of $5.2 billion. Their biggest loan was this year in March 2022 to a hedge fund called 3 Arrows Capital. Now they called it the master loan because this was the biggest loan they've ever given to a third party. They gave 3 Arrows a total of 15,250 Bitcoins and $300 million. So that had an estimated value of $650 to $670 million. And it worked when things were going good, Earlier this year, crypto was hitting historic highs like every other day. So during that period of time, 3 Arrows was making a lot of money. They were really good on their loans. However, things took a turn. Last month in June, they quickly realized that their master loan to 3 Arrows was actually in danger of partial or full non-payment. So they realized, based on what was going on in the market, that they might not get their money back. And that's because 3 Arrows Capital actually had a massive exposure to Luna. I don't know if you guys remember earlier this year, Luna went from like $85 to like 3 cents in one day. And apparently, some hedge funds, and I didn't know this before I read the corporate filings, they had lockup agreements when they traded this contract. So basically, they were not able to sell while the cryptocurrency crashed, and they incurred 99% losses. And 3 Arrows was rumored to have been one of those hedge funds. So they were locked in at that certain price. They weren't able to sell. And when the crypto crashed, they pretty much lost a lot, everything pretty much. So when Luna went belly up, so did the hedge fund. And quickly they realized, hey, we're fucked pretty much. We don't have any money to give back to either our creditors, the people, our investors, nobody. So literally on June 16th, they realized they were in deep shit. They went and they sought out legal counsel because they had no idea what to do. So on June 16th, 3 Arrows went out to get legal counsel. On June 23rd, exactly a week later, a judge in the Virgin Islands, which is where the company was registered, ordered them to liquidate, pretty much. On June 24th, Voyager, I guess they finally heard. They realized, oh, we might not get our money back. So they tried to figure out, how they should handle the situation. On the 24th, they asked for $24 million back of the $650 million loan, right? Well, they didn't get a response. So on the 27th, they demanded the full balance of the loan. And surprise, surprise, 3 Arrows didn't have the money to repay. So they didn't repay either the $24 million that they were ordered to repay on the 24th, nor the full balance that they were ordered to repay on the 27th. So Voyager issued a letter of default to them, pretty much saying, hey, you defaulted on your loans, and now they're going to take them to court because things are getting a little bit more serious, right? Once they realized they were not going to get their $650 million back, now they realized that they themselves were in trouble. So they immediately started looking for legal representation to see what was going on, what they can do. So they hit the streets and they were looking for liquidity. They needed a cash injection. They needed other investors to put money back into their business so they're able to facilitate transactions, right? So they fortunately were able to get a loan from Alameda, which is another crypto hedge fund. There's a lot of hedge funds at work here. So Alameda gave them $250 million and about 15,000 Bitcoins, which was at an estimated market value of about $500 million at the time. Unfortunately, however, it was not enough. They still needed more cash. Same time that their biggest loan holder went insolvent, cryptocurrency was declining. So as a result, the market value of their portfolio was currently declining at a time where they needed the money the most. And on top of that, to add insult to injury, customers were withdrawing their money because a lot of customers were losing money. So they decided to just take the loss, take their money out, and see where else they can do and hope for the best, right? All of this was working against Voyager. So they decided, you know what, let's hire a lawyer and let's hire an investment banker to try to raise funds from outside sources to see how they can possibly, solve the situation without really letting the market know, because as soon as the market knows, people are going to start panicking and it's going to make a bad situation terribly, absolutely worse, right? However, they weren't really able to get anyone to put money into them, right? Because they're a crypto firm, and one of the main selling points of cryptocurrency is that it's unregulated and the government can't control it. So you have, full autonomy. You can do whatever you want with your money. However, one of the downsides of not being government regulated is not having government support. So that means that if these funds decided, hey, we're gonna, lend money to Voyager, if Voyager goes into default and they go insolvent, just like 3 Arrows did, all of these funds were going to lose their millions of dollars. So they decided, hey, we like you and we are deciding to help you. However, we're going to need government regulations. We're going to need some government body controlling these transactions. So you're going to have to file for Chapter 11 bankruptcy. That's the only way we're going to give you the money. That's the only way we're going to help you. And, without really any other options and any other choices, the management of Voyager started thinking, hey, maybe a little bit of government intervention isn't that bad. Of course, when you need it, it's not that bad. So in the end, they decided to file Chapter 11 bankruptcy to restructure and reorganize so they can get rid of some of their debt. Now, the difference between Chapter 11 and Chapter 7, which is a lot worse, is that Chapter 11 pretty much just lets the company restructure and get rid of some of their debt while still being able to be operational and still being able to make transactions. However, Chapter 7 is full liquidation, sell everything, and give people their money back. Now, the biggest question that a lot of us have, me especially, is, what happens to people who have their money on the trading platform? And unfortunately, for a lot of us, we're probably never going to see that money back. Not for a long time, if ever. From these corporate filings, Voyager is intending to repay users with a mix of crypto, that they deposited. So if you have crypto, they're going to pay you back with the crypto deposited, stock in a restructured company, Voyager tokens, and money that they recover from Bankruptcy, from Three Arrows Capital. But honestly, if Three Arrows sustained a 99% loss in Luna, like how much money is actually left for them to reclaim? And already, you know, they're being liquidated by like a court in the Virgin Islands. So there's no guarantee that you're gonna be able to get your money back. There's not really much that Voyager can really do. So it's a really tough situation to be in, and it really sucks that, you know, this company was so stupid and mismanaged investors' funds, like funds from their clients. And I'm just hoping to see what comes out of this and how this is going to impact, you know, cryptocurrency regulations, because a lot of different countries are coming out with different regulations for cryptocurrency, and this honestly isn't helping. Celsius just went belly up like a week ago, and now Voyager, and it's just like one crypto platform after another. And if you have money in Voyager, because a lot of people lost a lot of money, I'm so sorry. I understand. Trust me, I lost money too. Probably not as much as other people, but you know, I lost a pretty penny. So if you guys like this video, don't forget to like, comment, and subscribe. Tell me what other videos you'd like to see me do next. If you have any questions, leave them below, and I will see you on the next one.